Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 29th, 2016. This week we'll cover same basic layout, so we're going to have a look at stocks which are hitting all-time highs, and we'll look at several of the sectors like consumer discretionary, REITs, financials, technology, and the semiconductor sectors. As they either hit or approach all-time highs. We'll look at bonds which are also bouncing, I think on the heels of disappointing GDP readings. The dollar index is pulling back, and the Federal Reserve has held off on interest rate hikes. And this is helping various commodities like gold in particular, and natural gas, but not oil for now. All right, this is our proxy for the market, the S&P 500 ETF SPY. Just Friday we hit all-time highs intraday, and then we pulled back, so we're very close to all-time high close, but we're still sort of in this trading range, and this is quite an unusual trading range. Another one of those records that this is one of the longest running ranges. So looks like we're going to get a breakout or breakdown out of this range. The only negative thing that I can say about this chart is that it's a bit overextended after this quite a powerful move from the Brexit lows. So potentially we get a pullback, but I think that this pullback will be, well, at least I'm viewing it as a buying opportunity, if it even materializes. Further down below I have several advanced decline lines. Here is the advanced decline line and the advanced decline volume lines. They are confirming the all-time highs by pushing higher. So far I see no divergences here of any major extent. There's a slight divergence in the unbalanced volume, but I'm not sure how big of a deal that is. Another one of those indicators I follow is it's a advanced decline line oscillator, which is intermediate term breadth momentum oscillator. A bit overextended, and has been in a positive territory for quite a long time, since February, so certainly we're overdue for a pullback of some sort. But this is a bullish market, and we are making all-time highs, so we could just continue doing so. A little bit longer term time frame. This is S&P 500 underlying index. This is one of my proprietary market breadth indicators. I call it market breadth index, and it called an entry into the bull market back here in June. Before that, we were, according to this system, back in a bear market from October. So my subscribers and I personally was shorting this rally of the October low, and then we were shorting all this, and we rode this entire leg down. For now, basically we're looking at only bullish opportunities, because now we are clearly in a bull market. Here's that same indicator in the upper pane here in a longer term time frame. This is going back to 1997. It does a pretty good job of calling the bull and bear markets, and also avoiding whipsaws. So for example, this is a 50 and a 200-day moving average. So if we have just a very simple system where the 50-day moving average is above the 200-day moving average, we're going to say that we're in a bull market, and vice versa. If the 50-day is below the 200, we're going to say that we're in a bear market. But occasionally we get this whipsaws where during for example, a bull market, the 50-day goes below the 200. But with this indicator, what I like about it is that it attempts to call those whipsaws. In fact, we had one of those whipsaws just very recently, right here, and I think we go back for a second. So this was the whipsaw right there, moving average, and I would still consider this a bear market, so I was shorting this entire rally, and then continuation lower here, I was shorting this whole leg down. So it's helpful definitely to look at the market breadth in addition to just simple moving averages. Here's another view of S&P 500. This is a weekly time frame. Very unusual behavior. We had 2-year lows here, and we just turned around and made all-time highs. And this just shows that you have to really keep an open mind in this business of trading. You cannot say for sure what we're going to see next. You always, well, me at least personally, have to be on, have to entertain the possibility of something completely different happening from what you're expecting. I was expecting continuation lower, from here on, but then we had Brexit thing completely reversed, erased, and we had an all-time high. So this did not happen, and we are clearly bullish. We are breaking out to all-time highs. Now we are a bit overextended. This is quite a powerful move, from down here in 1991 to 2173. So certainly a pullback is in order. But again, I think that this pullback, even if it materializes, should be viewed as a buying opportunity, and I will be looking to buy once we get a pullback. Here's another ETF that's widely traded and followed, QQQ, PowerShares 100 NASDAQ ETF, and it also hit all-time highs. It was lagging a little bit, probably due to Apple, and I'll talk about Apple a little later. But we're now this is a very major ETF, and also this is showing good appetite for risk, because stocks within the QQQ are certainly more risky than the stocks within S&P 500, which are not as risky as the QQQ. Here is another view of QQQ. This is a weekly time frame, also all-time highs. This is a very strong move here from the Brexit lows to all-time highs. Next, I'll show XLK, which is a sector fund. This shows very strong move again of the Brexit low, good participation, all-time highs. This is a very powerful 4 weeks really of non-stop buying, or rather 5 weeks of non-stop buying. So certainly a powerful move, possibly overextended, but by no means a weak chart. This is a very strong chart, and I think again, if we get a pullback, this should be viewed as a buying opportunity. Here is Apple. Everybody was expecting Apple results just a couple of days ago. Results did not disappoint. In fact, we took out, well, if I was shorting Apple, for example, and I wasn't shorting Apple, but this looks like a bearish chart up to now. So if I was shorting Apple, I would probably be shorting it around here with a stop above this high, or possibly above this high. So if you are shorting Apple, we had this big gap after the earnings, and it took out both stops from here for above this level and above this level. So this this surge here took out both of the short stop locations. So this looks like a potential reversal, so we could potentially see higher prices ahead for Apple. And another one I want to show for the technology sector is XSD, and this is a very broad semiconductor ETF, and I'll show SMH next, but for now I just want to show XSD because this really represents a very broad diversified or the non-diversified, but this is a broad exposure to the semiconductor sector, and it is also hitting all-time highs. Also a very good looking chart, and this is a very bullish chart. So again, if we do get a pullback, this should be viewed as a buying opportunity. Here is a more broadly traded ETF. This one has much more volume, but it's showing very similar pattern, and these are all-time highs as well. Here's another ETF that's hitting all-time highs this week. This is consumer discretionary, a highly economically sensitive ETF. This week again hit all-time high. So this is showing very good appetite for risk, in my opinion. Here's another one. This is a equal weight industrials ETF. Now, XLI, the more commonly traded one, did not hit all-time high this week, but RGI, which is a equal weight industrials, did hit an all-time high this week. So again, this is showing good participation. Industrials it's a diversified ETF, has a lot of industrial suppliers, but it also has quite a bit of transportation stocks. So again, this is showing good appetite for risk as well. Here's a financial sector. Now this one is lagging. This is XLF, so we're a little bit, well, actually quite a ways off from the all-time highs, but XLF is really heavily weighted towards the major banks, so it's not as broadly diversified. So here's another ETF, which is RYF, which is equal weight financials, and it has much more broadly diversified ETF. And this week it hit 44.61, while the all-time highs were at 44.76. So this one is certainly better performing ETF, albeit not as widely traded. And I think it's getting a lot of help from the REITs, real estate. So here's REITs, real estate ETF. Clearly a bullish chart and then at all-time highs as well. Yeah, this is a TLT bond treasury ETF. So here we had the all-time highs, and we had a correction towards the, well, I guess this level here. And now it's always good to be hindsight 2020, because you don't really know where this correction will take it. I mean, we could have corrected even further to this level, or who knows, maybe even further to this level. So it's really difficult to predict where the correction will take place. In this case, the correction took place to the breakout level, I guess, to this gap zone, and then we rebounded. Now, where is this going? This gets difficult to say again. So we could potentially make another all-time high. That's also a possibility. Now, for my taste, we're a little bit still overextended, so I would like to see a bit of a deeper correction before more buying on my part will commence. Here's a TLT on the longer term time frame. This is a weekly, going back a couple of years. Also showing all-time highs here, and then a correction. It looks like a hammer candlestick, and then a surge of the candlestick of the hammer candlestick. So we could just make all-time highs yet again. It's entirely possible. I pointed out these patterns here. This is the depth of this pattern. It was replicated on the upside. Now we have a bigger pattern here, which is 20%, and we're basically 6% there. So another 12% would not surprise me too much. More broadly diversified ETF is the AGG. I actually opened position way back in December, and I'm just still riding it. It just keeps going. There's really no point exiting. So, this is a very steep advance here. So I pointed out a couple last, in the previous several videos that this was way too steep, and so it certainly needed the correction. Now, again, it just feels like it's not yet. Hasn't retraced as much as I wanted it to retrace, so to speak. But you never know, because this is a bullish chart again, so we could just make another all-time high. And here is a longer term time frame. This is a weekly time frame. I pointed this out, a big possible triangle pattern. We got the depth of this pattern and then some, and then we're kind of correcting sideways, I'm guessing, but maybe we're gonna make another all-time high. It's entirely possible. And here's another one, which is a municipal bonds. TFI. You know, there's another one which is called MUB. Either one will work, but MUB has a really weird looking, let me just show it to you, weird looking spike out of here, so I didn't particularly want to trade that one. This one looks pretty good, and you know, of course this was a steep ascent, but at least the correction was somewhat deeper than the other ones. Plus, why I really like this big volume spike here, so looks like we are, there was quite a bit of interest in buying and at least transacting at this volume. So we'll see where this goes. Looks like bonds are clearly bullish as well. So we have both bonds and stocks bullish. Um, Probably because of all of the money printing in the world. Alright, moving on to the wild and crazy world of currency trading. This is US dollar index, end of day chart. So I thought that this was a bull flag. Maybe this is like to here, and then this was a bull flag breakout. But now it looks like we kind of came back down to this level here. And yeah, I think it's still possible that this is a bull flag, and maybe we'll get buying. Buying will start here again. Anyways, we had several events this week. We had the Federal Reserve meeting and announcement of that they're going to hold the interest rates for now. And then on Friday we had a GDP report, which was quite disappointing. So it looks like the dollar did not like that, and it dropped. On a longer term time frame, I still think that this is a bullish chart, and we're basically consolidating this very long term range between 92 and 100. Possibly we're going to come down and retest this level again now. Another possibility is we just stop and then rally back up. Here, down below here we have, you know, basically we have euro, Japanese yen, and British pound. British pound is at 30-year lows, while the yen is at 52-week highs. And actually, I'll talk about yen yet again because it's an interesting chart. While euro is sort of a reflection, it's like a mirror image for the US dollar index. So let's look at the US dollar versus the Japanese yen. Pretty clear downtrend. I don't have to be a rocket scientist to notice this one. I thought that this is a bottoming pattern, and I thought that this was it basically, that we're going to continue higher from here. But looks like Mr. Kuroda, who is a Bank of Japan governor, said that they're not going to print as many yen as they were thinking initially, and maybe they're going to, you know, reconsider their strategy of printing lots of yen. So in that case, the yen started to gain in price, and this is US dollar versus the yen, so yen was winning in this case, and this on Friday was a big drop or for the US dollar versus the yen. So in other words, yen was strengthening. We'll see if that holds support here. If it doesn't, then of course we'll continue lower, but maybe this is a bottoming pattern. We'll see, because right now this could be a higher high versus this high, and this could be a higher low versus this low. So we'll see if we're going to hold here or turn around. Here's another view of DXY, which is a US dollar index. Here on Wednesday already we're getting some sort of hints that the dollar was under pressure when the Federal Reserve did not raise the interest rates. Maybe already we had some you know, GDP report was already being compiled, of course, and maybe, who knows, maybe it was already known about it before it actually came out. Here on Friday, of course, is the GDP report, and the drop after that. So the dollar is under pressure, and of course gold loves weak dollar, and this week it has rallied. This graph shows, this is a daily time frame of dollar versus with the gold on the same chart, and you can kind of see that they move in opposite directions. Here is a correlation coefficient in the daily time frame. You can see that it spends most of the time in the negative territory. A couple of weeks we had a pretty strong positive correlation where the dollar and gold were moving in the same direction. Now we're uncorrelating again, and negative correlation. In other words, dollar is moving lower and gold is moving higher. So this is a normal relationship. Looking at the longer term time frame, this is a weekly time frame for gold going to 77 versus the United States dollar. Also the same thing, we had a relatively strong, or rather quite strong correlation, negative correlation between the US dollar and gold. So it is normal for these two to move in the opposite directions. Gold is taking advantage of the weaker dollar right now, so looks like we could continue to 52-week highs. That's entirely possible. This chart is a daily chart and looks like a very powerful move after this breakout, and you know, good looking bullish chart basically. Here is a weekly time frame for gold continuous contract. Last week I pointed out that we could see buying here at 13.10 or so. So we did see buying commence and a rally from that level this week. This is a clear, you know, level of support. Well, this is a breakout that now turns possible resistance. So for now, looks like we had two, well, actually three touches of that level. So for now, this level is holding, but another even stronger level, I think, is around here. But then, you know, gold will need to do quite a bit of correcting before that level is reached, obviously. And here's GDX. This is a gold miners ETF, the much more volatile version of gold. A very powerful move from here, from all-time lows to 52-week highs, and we're approaching, you know, more than double, almost triple the move, triple the. So we're at 1240 here. So we, you know, at 36 will be tripled. I think it's a bit overextended, but again, I kept saying the same thing, you know, back here. As far as the market breadth is concerned, looks like we are confirming these all-time high or 52-week highs again. So looks like gold and gold miners are, you know, in a good uptrend, and most likely, if we get a pullback, this should be viewed as a buying opportunity. Okay, this is oil, West Texas Intermediate, light crude, continuous contract. You know, I think this is a bearish chart, and I kept saying this bearish chart. I'll show you why when we get to the weekly charts. This is a nice breakdown here. You know, I pointed out the support break, a little throwback. So basically, if you're able to get short right there, that's a great place to get short, and then, you know, continuation lower. Now looks like we're attempting to hold at the 200-day moving average. I think the stronger support is maybe down here at 39, possibly here at 35. So possibly we'll just continue lower. Again, this is a bearish chart, so this entire you know, bounce, I think this is a bearish bear market rally basically. And here's the reason why I think that this was a bear market rally. This is a, you know, a bearish security will make lower lows and lower highs. So far we have not made a higher high. In fact, we stopped exactly at the resistance level right there at 50 and some change, 51 and some change, and then were rejected from that level. So for now, you know, we are kind of coming to the support zone, so possibly we're going to see some potential buying activity here. Here's USO, United States Oil Fund. This is okay for trading. I would not hold it anything, you know, for a longer term. This is, it looks like a wedge, and then a resistance here from the support from this from this hand candlestick, and a gap here, had a support here, a rejection candle, and then a continuation lower with a wedge break. So for now this looks like it's set to continue lower, if anything. Right, and this is United States natural gas continuous contract. This is a bullish chart, and I think it became quite bullish after we had this breakout above 2.5, but possibly even before that, around here at 2.3. So now we had 52-week highs and then a correction, a corrective pattern. Now this Thursday we had a big, really big candlestick, so this is quite bullish, I think. And I think we're most likely going to do some, kind of small correction and then possibly break out to fresh 52-week highs. I mean, I think this is a bullish chart again. Here is a longer term one, weekly time frame. I like, sometimes you just have to kind of zoom out and just remove all the indicators. It's just easier this way. So resistance here at 2.5, breakout to 52-week highs and throwback, and on this week looks like we're set to continue higher. Here is UNG, which is a tradable vehicle for natural gas in the United States, unless of course you trade CFD, or you can also do options on natural gas. So looks like we had a corrective pattern from 52-week highs, corrective pattern, and then a surge of this corrective pattern. In general, I think this is a bullish chart again, and my subscribers hopefully are already long, and I definitely, myself, I already got long as well. That's it for this week's recap. If you have any questions, please don't hesitate to send them in. Thanks for watching, and please stay tuned on how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members, so that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right, thanks for watching, and please consider signing up for the trade alert services. Bye-bye.